webinar up and get this PA started. Okay, welcome, welcome, welcome. Good to see everyone flooding in. And I'm just going to minimize this, click this, and we will officially get started here in just 2 shakes of a lamb's doodah, 90 seconds. So just letting a lot of people in, and can I get a quick howdy doody, just a quick heads up that you can hear me, see me, and all that good stuff. Thank you, Rick. Okay, David, and of others. Okay, bloody good show. Right, gonna find. Okay, lots of people flooding in, so that's great. And then we are. Okay, lots of people raising their hands. That's okay. Like I said, we're going to get started here in just a moment. Lower everyone's hands because we don't need them up at the moment. And we are good to go. All right, so, right. Like I said, we got a lot of ground to cover today. I'm going to do my absolute best to keep this as simple as possible. Just as a precursor, it's quite likely you may want to review and re-review what we're going to cover today. I'm going to break it down, keep it as simple as possible. Because an analogy I use is you don't need to know how an engine works to drive a car. You don't need to be able to dismantle it, know where every cog, lever, and pulley is for the car to get you to a destination. You just need to know that the car will get you there. So I'm going to talk about how we trade today when we get a signal. And right now, we don't have a signal for today yet. I say yet because obviously we're looking at the markets right now. And today is a very hesitant day. We're going to get into that in a little bit, but we've got a few different things going on, which is making for a hesitant moment. That's okay. And then we're going to rock and roll. All right. I see myself asking to be promoted to panelist, and I don't know if it's me or double me or really me. So I'm not sure who it is. It was, okay, it's Tam. Okay, I was wondering where you were. I'm looking in the list for Tam, and but I've got 2 here, so I'm wondering if one of them's Phil by proxy. So I was using my account to log in. So I'm promoting 2 people to panelist, and we're good to go. So, all right. So you can, let me just right click and rename you so you don't look like you've had a operation. All right. All good and groovy. All right. So I'm gonna dive right in, okay? And I just want to check, like I said, a lot of people still coming in. Okay. So, all right, we're just gonna get on it. So, right, pressing buttons, here we go. Swap the bloody display, and then, right, what the fuck is that? Okay, that's not beginning of the presentation, that's halfway through. Okay. Okay, go. All right, so today, well, let me just put the audio break in for editing. So welcome to day 3. We have covered a lot of ground so far, but today we're going to focus on deploying your profit package in a few clicks and how we automatically close that to cash for anywhere from $50 to $5K a day daily income. Okay, so I'm going to blitz through the same stuff that we did at the beginning of every session. Housekeeping stuff. Look, we'll go for about an hour. Transcripts will be available. Inner Circle and Red Carpet VIP replays will be sent 24 hours or less because I have to sleep. So they're usually sent out the next morning when I get up and after I've collapsed, and we'll get rock and roll. So We are live streaming in Facebook. I just confirmed that we are live streaming, and resources are posted in the Google Doc, the resources doc. It's pinned in the Facebook group, and also Tamara has posted that here as well, so you can quickly reference it. Someone's asking, how long will the replays be up? 48 hours. In fact, day one is going to come down very shortly. That's why we have the red carpet and the inner circle, so you can get longer access to them. So if you haven't watched day one, by the time I wake up in the morning, the reason we do this is we want to make sure you keep up with the training as we go. Okay, so you've got time is ticking. All right. So also watch out for any scammers and spammers pretending to be me. If they don't have a blue check, if they're trying to sell you something via like the latest whiz bang crypto profit share bullshit, it's a scam. Report them. And thankfully, it looks like we squashed the bastards, because I haven't heard of anyone else doing this at the moment, because I'm making everyone aware of this. So again, be vigilant, be smart, and if they don't have the blue check, it ain't. Okay. So cool. And yes, you guys are losers doing this, and you're probably watching this right now. I won't swear at you. Don't need to. You get the friggin' bugger off. Right. So we may, now the last couple of days we had trades before we went live. We may have one here today, but we got a very hesitant day right now. In fact, we've just entered the fourth candle, and this is a very mulled day in terms of like the daily chart. What we're looking at, the S&P 500 today, it's really doing nothing. There's a economic data coming out today, so the markets are really doing nothing. We might have a no trade day, but we are going to emulate and practice and show you how to paper trade and do a lot of cool stuff besides that. So with that being said, here. So on day two, I did say at the end, I'm going to give away another $100 for the best aha moment. And the one that got me was actually from Dennis. My aha moment is, I fear not the man who's practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. And it's really very prompt. Now, personally, it's one of my favorite sleep quotes, but it really is about the application of this again and again and again and again and again. This is your one kick, and you practice this 10,000 times, you're going to be very, very well off. So this one, out of all the comments, really stood out to me because it's very, very relevant. So the easiest trading requires practice and practice. Hard at first, but slowly, slowly getting easier. That's okay. Do it over and over again. That's really what it is. So I want to give Dennis a huge congratulations in the chat box, please. Congratulations, and well bloody done. So now someone's saying that the audio is a little off. Can I just get a confirmation? Is the audio okay? Do I need to tweak it? Do I need to smack it? It's drifting in and out. A couple of people saying audio is okay. Choppy now and again. Okay. Let me just check something real quick. Microphone. All right. Tell me, is that any better now? Is that clearer? Is that much better? Okay. Right. So we'll switch for that. I've got multiple microphones, multiple setups and processors. So good. Now, someone's asking, how did the trade do yesterday? That was actually a successful trade. It was 100% return on capital. Did I capture that? Let me just see. But anyway, it did turn out to be 100% return on capital. We'll get to that in a little bit. Okay, so day one is done and dusted. Replay is up, but like I said, that replay is disappearing as of tomorrow morning when I wake up, have my coffee and my breakfast, a little bit of croissants for breakfast, and a big delete button for day one. So if you haven't seen that yet, get on with it. Day 2, again, we did that yesterday. We're talking about how to find the pulse bar and what that's all about. Again, the replay is up in the resources Google Doc for you, including transcripts, cliff notes, summaries, timestamped, everything you can go back and look through. Today, we're going to talk about how to close to cash, why this is faster than everything, the midday swipe, and a whole lot of other cool shit as well. Tomorrow is the most important session because this is how to make it faster, better, easier. I'm going to show you some incredible stuff tomorrow. To me, this is the most important session. So be there or be a equal-sided for faced object. Right, I was trying to think, hold on, I've got to do my geometry here. How do I say this without saying square? All right, day 5 is a complete breakdown of everything, recap, ask me anything, nothing held back, and any challenges or anything else, boom, we've got to get you covered. So, like I said, we are going to fund one person's business with $1,000. That's what we started off with. And the code will be given at the end of the session. But yesterday, I decided to up the bloody ante. It's no longer 1,000. It's $2,000. Okay. So that's just going to help you just get there a little bit faster. I like to light some fires under some acids. An equal-sided quadrilateral. Yeah, there you go. That's a better one. Thank you for that. So, homework review. Yesterday I said, hey, go look at the last few days and find the pulse bars. And honestly, you all did fantastically well with this. A lot of people absolutely nailed it. There's a couple of borderline ones, like yesterday's one was, yeah, if you had just used the Fibonacci tool and you were just slightly off, it wasn't a pulse bar. Turned out it was. And again, if you were very, very, very precise, it was a pulse bar just. So great. And you can use this as a quick reference. And I've also posted a reference photo in the Facebook group. So you can say, okay, how did I compare? You can put it side by side. Because this morning I went through about 40 and I even took screenshots, corrected them and everything else. Couldn't do that for every single one because obviously there was a lot more, but you get the point. A lot of you were getting that. And one thing also to mention is, you should pat yourselves on the back because you did fantastically well with this. But the first pulse bar can be any bar in the first 4 candles. So for example, this one here, if where's my, okay, there we go. And this is one thing that Phil was talking to me about. He said, yeah, you've got to clarify this. This one was the first pulse bar, but it was the 3rd candle of the day, okay, in the first 4 candles. This one was the 2nd one. This one happened to be the 1st. This one happened to be the 1st, and this one happened to be the 1st. The 1st candle of the 4. But the first pulse candle can be any one of those. And if I take that as a quick, like I said, what's happening in the markets right now at this very moment, as we're live, what the hell is that bugger? Right now, we haven't had a pulse bar yet. In fact, by the end of this, and I'm looking for time, in 20 minutes, if this bar, right now it's at the top end, but it's obviously we're not closing yet. If this bar gives us a pulse, then hey, that's the 4th one of 4, but the first pulse candle. Just want to clarify that. And Phil was recording a video on that as well, just to kind of clarify that point. But again, hopefully that will help a lot of people. Right. Anyway, with that being said, there was one thing that a few people noticed that worried them. They were like, there were more losers than winners. What the hell? Again, we look here, there was 2 winners in the last 5 trades. There was 2 winners and 3 losers. By the way, that's a 40% win rate. Well, if we're doing same number of, same position size, that's losing money. What the hell? I thought this had a 75% win rate. What the hell, Sean? Well, here's the thing. there's a few things that are happening right now. We call it a choppy market, if you will. And also remember, you're only looking at 5 days. So this is a small data set. We're looking at long term. So here's the thing. Right now, we've got a lot of economic news coming out. CPI, interest rates, employment numbers, State of the Union was last week. Fed meetings. There's more economic data reports coming out today. We're also in an election year. Let's face it, that's a clown show, and I'm trying to censor myself today a little bit. I probably will let loose and forget myself in a wee bit. But there's also, these are what we call red flag days. In other words, there's a lot of stuff coming out that can push, move, or make the market a little hesitant. We're also at all-time highs for the S&P 500 in the last few days. This can cause hesitation. So as you can see here, with what we're talking about here, yeah, this is a very hesitant market, and we're having ups and downs, and are we pulling back from the all-time highs? There's a lot of different things that can move and pause or change their mind. But if we look in general, since October, we've been in a very clear going up. Okay, we can look at this chart and say very definitively, bottom left at the top right, we're going up. Okay, but in these moments when we're setting, I think it's the 17th time that we've set an all-time high this year, I think it is, for the year. Well, that can cause a little bit of, oh, are we pulling back, and little hesitation in the markets, which is what we're seeing. Okay, now with that being said, I'm pulling back to the, yeah, there we go. So again, just from this morning, futures are subdued as investors wait for more economic data. US stocks rally set to pause, and all the rest of it. Again, news tells you what's happened, not what is happening. Okay, usually the news is the last, the public's the last to know anything after it's been reported by the news, because obviously there's lag and delay there. But here's the thing, like I said, this is only 5 days of data. Let's look back a little bit further. Let's look back over the last 45 days. Now, 45 days, you can see a lot more wins. And funnily enough, and this one started to piss me off a little bit, is right here, I had 4 losses back to back. And that was a little bit of a, what the hell is this shit? Okay, but it happens. Now, even with that, going back and taking 45 days, like a month and a half, and I'm just making sure I can do this, that was 20 winners, 7 losers, 4 days of no trade. That's these little purple bits you see right here. So like here, 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 and here. So in 45 days, only 4 no trade days, 1 break even day, and again, winners and losers. Now with that, just to put it into context, if PowerPoint will work, come on, you bastard. Okay, that means we had a win rate of 74.07 over 45 days. And like I said, this is considered a little bit of a choppy period right now. Okay, so even with the choppy time zones that we're looking at and things like this, and I'm just clear all those little buggers off. Okay, close that again. That is what we're looking at. Bigger sample set, more data, and we can see this. So I also wanted to show you looking back over 10 years. Okay, 10 years. So we can't exactly test options, but what we can do is use stock as a proxy with 1-to-1 risk ratio, which is basically what we do with credit spreads and what we're doing here anyway with profit packages. And you can see this is what's called an equity curve. Now, I won't go into all minutia and math and everything else because we don't really bloody need to. what we can see, though, is over all of these trades, which it worked out to be about 2,200 trades over 10 years. So 2,200. This is no compounding. Okay, just for the people who will question this, no compounding, flat trade, fixed amount over 10 years. So zero compounding. Compounding would have made this go like a bloody Exocet missile. This is straight, boom, 1-to-1 risk ratio, stock as a proxy, 10 years, flat trading. And you can see that equity curve is almost freaking perfect. It's almost a straight line diagonally. And that is why we love this method. So this is what we're looking over a great period of time. And even if we take a slightly longer period than the last week or 2 weeks or what have you, when you look at these things in isolation, like someone I'm working with right now, they put their first trade on not yesterday, the day before. And they looked at me and said, I lost. And I said, I know, so did I. And they said, but I thought this was meant to be winning 75% of the time. I said, yeah, over time. So, well, I've got 100% loss right now. I'm like, it doesn't mean your first one's going to be a winner. You've got to look over time. Okay. So does that, first of all, just in basics, does that make sense? We're looking at winners over time. And again, with a decent sample set of data, you're going to have more winners than losers. Okay. Does that make sense? Yes. Just put yes in the chat box. Okay. Cool, cool, cool. Now, we're going to get into the specifics of trading, putting the profit packages on a moment. I just want to address this again with the success rate and long-term data. Okay, perfect. That's all. A couple of people asking, well, how you do the trade. Yeah, get to that. All right, now I've lost my mouse again. Where is? Okay, there. Oh, there it is. As I draw all over the bloody screen. All right, cool. Right. So that's why we do this, guys. We look at the long-term profits, not the short-term stress. This is one of the things, like I said, we bring a business mindset to everything we do, and we're looking at the consistency. So with what you'll learn today, even in these choppy times, we can even increase that win rate dramatically. So today, we're going to go over what is exactly a profit package, okay? How to deploy a profit package, how we can even take profits at midday rather than waiting until it closes. We're going to talk about paper trading. We're going to get into that. And we're going to do an assignment as well. All right. So with that being said, I want to recap the strategy. Okay. We looked at this. So we look for the first, in the first 4 candles, in the first 2 hours of the day on a 30-minute chart, we look for a pulse candle. And it could be candle number 1, 2, 3, or 4. The first one that appears, that's indicating the direction that we're going to take for the day. That's our bias, okay? Then we place a profit package trade, which we're going to cover today, and then we can walk away. All right? Now, we can come back and check at lunchtime. We're going to talk about that to see if we're pretty close to maximum profit. And then we just do this every damn day. That's it. So what is a profit package? Now, I'm going to give you full. First of all, I'm also going to backtrack for 1 second. One thing I think that will be helpful, and you tell me, if I gave you a copy of all of these PowerPoints as a PDF, these last 3 days, because this is the main content. If I give you a PDF so that you can refer back to each presentation going through this, would that help you? Put a yes in the chat box. Okay, if that will help you, and it looks like predominantly yes, then I will do that for you, okay? And I'll upload it into the resources Google Doc. So this will help you because we're going to go, there's going to be a little information here. I'm going to try and simplify this as much as possible, but you may need to go back through this a couple of times to get it. And honestly, with the paper trading, you can screw this up a couple of times. It's all right for a few times. It's not going to cost you a dime. This is why we want to focus on paper trading. Also, I got a little bit of a surprise for you later on as well. So let's get into it. Like I said, I'm going to try and keep this as simple as possible. So what exactly is a profit package? So we're going to do the simple version. I'm going to do the expanded, slightly technical version. You don't really need to know the technical aspects, but I do need to say it at the very least, okay? Because that's my responsibility as trader here and teacher this shit. So we believe we know the direction with the pulse candle, okay? Whatever direction that may be. So we're going to create a profit package, which in technical terms is called a credit spread, with a vehicle called options. Now I'm going to get into this in a little more depth, but just keep this simple concept in mind. We're going to get paid by the markets for what we're going to do, because we're going to sell our profit package to people who we believe are on the opposite side to us. So if we believe the markets are going to go up, we're going to take this profit package, deploy it into the markets to people who believe the market's going to go down. We think they're wrong. And our analysis suggests that it's going to go up. So we're selling it to them. They're going to buy it through the market and pay us, okay? So the market pays us a premium is the proper terms. I'm using bunny fingers a lot because these are the trader terms, but I'm also then trying to create concepts that are easy to understand, like a profit package. A profit package is basically what this is. And we're putting that into the market. People are buying that from us. We believe they believe the opposite to us. We believe it's going up. They believe it's going down. Or if we believe it's going down, we're going to sell it to people who believe the market's going to go up. So there's two sides to this, okay? So the market says, oh, this, Sean is deployed this profit package. We'll give him a premium for that. And that premium is our profit inside this, okay? Now, at the end of the day, if we were right and the markets go the way we expect, we keep 100% of that premium, our profit. If we're wrong, guess what? And if we're completely wrong, then we lose part of that, what we were risking to place that trade. Now, we're going to get into the ratios and everything else here in a moment, but I just want you to keep in mind this profit package concept. We're deploying that to the market. We're getting paid for what we do. So in the simplest of terms, that's it. We don't need to complicate things beyond that. Now, that being said, this next bit is a little bit technical, but you don't necessarily need to know it or understand it. But for those who are, I would say, experienced or familiar with options, I need to say this bit so that what they know about options can be fine-tuned, okay? So we're using what's called 0 DTE, 0 days to expiration. And all that means is at the end of the day, it closes to cash, we're done. Okay, that's the only thing you need to know about that, really. Now, options can seem complicated, and I'll be honest, a lot of people overcomplicate it. There is a lot to understand with options, but with what we're doing, we basically eliminate all those complications. We're not going to get into things like the delta, gamma, theta, time decays and all this other stuff. There's a lot of shit that you can do, and then you can do all sorts of different strategies like, broken wing butterflies, upside down zebras, bloody iron condors. All that stuff that you may have heard about them, if you are familiar with trading, goes right out the frickin' window. Okay, done. We don't need to worry about any of that. Now, for people who want to know what an option is, think of it like a deposit. It's a deposit agreement. Okay, if I wanted to buy a car, I could go up to, say, Fred and say, hey, you got a beautiful Aston Martin DB9 there. I want to buy it in 30 days, and I'll give you No, it's $100,000. I'll give you $10,000 to buy with the option to buy it in 30 days. But I've got the option, not the obligation. That means is at the end of 30 days, I could, buy it or not. And great. Now, if I find out that, say, I don't know who's hot shit at the moment, Henry Cavill owned that Aston Martin or something like that. Someone famous owned it. Well, guess what? The value of that option, the value of that car goes up, right? Because, hey, it's Henry Cavill's Aston Martin. All right, very cool. But here's the thing. I've agreed to buy that at $100,000, even if it's worth $300,000 now because it's Henry Cavill's. Well, guess what? I pocket that difference, $200,000. Conversely, if I find out, well, it's an Aston Martin on the outside, it's actually a tuk-tuk, a Thailand tuk-tuk on the inside. That's what it's powered by, a two-stroke engine. Then, oh, did I just lose video? Okay, hold on one second. Let's find out what's going on here. Okay. I'm going to try and do this directly. Why has my video cut out? Okay, give me a second, guys. I'm just going to disconnect my video and then my camera, reconnect it and see if that fixes it. Okay. Da, da, da. No, my camera literally just took a dive. Okay, that's bloody weird. Oh, hold on. Hear that? That's an alert. All right, well, we got a live one. So okay, I'm gonna take a bypass for a moment. This one is suggesting that we're going to go down for the day. It's finally made a decision about what it possibly could do. So, okay, being down, I'm going to do this real quick, but then I'm going to walk through what I'm doing. For some reason, we don't have a camera, so, all right. So what I'm going to do is, actually, I'll do it here first. So it's going to go down, so I'm going to click bid, ask, I'm going to create a profit package. Now we're going to get into this in more detail in a moment. This is a $1 spread. And I want to collect about 50 cents. So I'm going to move this up. 50 cents. Yeah. Let me have a look at the chart again. It's actually moving back the other way. 51.6, 51. Yeah, I'm gonna take an in the money. So bear with me a second because I want to do this now. I'll take that. Okay, so this is the just real back of the envelope. This is the maximum profit I can get. This is the loss. Those are very imbalanced. So I'm going to move this up so it straddles this orange line. 58.41. Yeah, this one's tricky. I'm not getting a very good price on this one. Okay, I'm going to go below the line. And I'm going to increase the quantity. I'm going to put my risk about as close as I can to $100. So there's $128 risk for $74 profit. That's just, it's a little imbalanced, but I've got a net credit, view and send, submit. Okay, we'll take that. That's working. In a second, we'll probably hear a dingly ding. Now, that's on XSP. Again, I'm going to go over this in a moment, but I want to do it strike while the iron is hot, so to speak. So I'm going to do the same over here, 225, like that. I'm going to increase that to about 1,000, maximum loss, which closer. There we go. Net credit, just checking. View and send. Oh, and I got filled immediately. That's 2 trades I just did. Now, why my camera isn't working, I really don't know. But just placed 2 trades. This one's still working. So this one might take a little time to fill. And that's what it means, is when you place a trade, right now, you'll see it's working. That's what this little symbol is. Now I'm using the web version, and I'm also using the desktop version. But right now it's working, and if it goes through, great. And I'll just put it over here. Good. Now we're going to go through all this shit in a minute. Okay. I just wanted to do it right now because you don't want to keep waiting and waiting because the pricing gets imbalanced and shit can happen. Now, right now it's sideways, and we'll see what happens. Okay, we got till the end of the day for it to actually go ahead and do something. But today's going to be a hesitant day. Right. Anyway, back to what I was talking about. So like I said, the end of the day, an option, and I'm going to try and get this bloody camera working again. I'm just going to unplug it again. Find out. Probably my bloody kittens, honestly, have done some funky shit and pressed it's loose. So let me just do that, plug it into a different port. Might also just be Zoom being a pain in the balls. Let's just see if I can turn it back on. Okay. Well, there we go. Okay, we're back. Right. Let me just switch that over to this. See if that works. Okay, well, it's there and it's frozen. Okay. Shibangsky. I must have knocked the bastard. There we go. All right, we're back. So, like I said, this is an option is like a deposit. So what we do is these agreements, these little deposit agreements, these options expire at the end of the day. So the cool thing is, if I was selling the car and someone wanted to buy the car from me and they only had until the end of the day, they've paid me a premium, a deposit. At the end of the day, if they're wrong, that agreement disappears. I keep the deposit. That's really what we're doing here. So a single option, this is called a derivative. Okay. So a single option controls 100 stock. So one SPX option controls 100 SPX shares. Okay. Now we're going to buy and sell options at 2 different prices. You see when I draw those 2 lines on the chart, that's because we're selling one and buying one, and we're creating a spread between those 2 prices. Now, like I said, we're going to go through this in detail in a moment. I just want to get the basics out first, okay? By doing this spread, it caps our profit, but also minimizes our loss. So we don't lose, like stupid amounts of money, like some people do with options because they screw it up and they don't know what they're doing. So if we're right about the direction, these agreements expire worthless and we keep the money, they're worthless to the market and to the people who are wrong about the direction, we keep the premium. Now, like I said, we really don't need to know how the engine works to make this a success. What we need is a vehicle that will get us to our destination. So I did a ding. There goes our other trade. So that's good. We'll see how it goes for the rest of the day. Might be a winner, might be a loser. I don't care. Now, it seems strange to say that so flippantly, but at the end of the day, I know I'm going to have more winners than losers. So it is what it is. Over time. So like I said, let's set up our broker first. Okay, so I'm going to use Tasty Trade in this example because it's to me, the easiest one to use, and it is what I use. So a lot of this same stuff will apply to like Think or Swim with Charles Schwab, with Interactive Brokers and their platform, or TradeStation, or whichever broker you use. Okay. So while I'm focusing on Tasty Trade, it's just because I can't go through the same options on every bloody platform. So I'm just going to use one, and you'll have to Google maybe a couple of tweaks here and there. So first of all, and I will do screenshots of this. So first of all, the thing we want to do is on our positions. So this is the interface. So this is the desktop version. The web version is very similar, but I'm just going to focus on the desktop version for now. And here's the cool thing. When you change it on the desktop version, it actually will change all this stuff on your mobile phone app and on the web version. So that's why I come here. So I've installed Tasty Trade. I've got my account. I'm all good to go, but I want to change a couple of things. So the first thing is I'm going to come over to positions. So you got three main tabs: positions, trade, and activity. You might have all this shit over here. Okay. And what we want to do there is just close that because we don't even need to look at that. Then coming over here, we want to just, yeah, okay, it is here. We want to change our heading so we know, days open. So we know this is 0 day, what our trade price is, what our P&L is, and everything else. Now, I've got, if I'm correct, I'm gonna take home 860 bucks. Okay. If I'm wrong, then what have you. But right now I'm up 20 bucks, it's 40 bucks, and it's going to fluctuate a lot. So we'll come over to this cogwheel so that we have all the same data here. And I'm going to do a screen cap of this. Control-Shift-D. And I'll put this up on screencast. Tam, if you could make a note of this URL as well, because I'll include it in the comments on the video or the replay or in the transcript guide that goes with this. All right, so I'm going to go through what some of this shit means in a moment. So bear with me, okay? P&L is profit and loss, but this here on this side is what you want to have displayed. Everything else goes over here, and I would recommend having it in this order. Okay, so days since open, days until expiration, the trade price, the mark, P&L open change percentage, P&L for the day, which just means are you making money, are you losing money? That's what profit and loss means. And the cost, capital requirement, and then that delta. Now, honestly, a lot of this stuff we don't care about. Okay, it's just there. It's useful for other stuff, but for what we're doing here, we're keeping it simple. All we really focus on is, are we making money? What's our P&L open? And then what's the actual dollar amount? Okay, and what's our maximum potential premium? That's what we're getting here, the cost. Okay, so with that, that's all we need to worry about for this. Then we come over to the trade tab, and we're going to change some of these columns here. So to do that, we come up here to the same kind of cog, and we can come over to options. Actually, I forgot. No, we don't even need to do that. We actually come up here to the tab itself. We're going to have bid, ask, open interest. This is basically what's the liquidity for these options right now, and lots of other stuff. But basically, open interest. That means, okay, how liquid is this part of the market right now? Yada, yada, yada. And you've also got that basically just lets you know that there's interest at that price. Next one is volume. So VOLM. And then out the money percentage. Honestly, we don't really look at these because we're trading. You need something there, so to speak. And we're trading SPX, so we know there's a lot of liquidity, a lot of interest, and everything else. The only thing we really care about is what I'm going to get to in a moment with strikes, okay? And then, what we're doing. So a lot of this is not anything you need to worry about for this strategy. It's just you have to have something there, okay? Now, with that being said, once we've done that, we can come over here and create a watch list. Okay, so I got to remember how to do this because it's been a while since I've done this. Watch list. Okay, so no, that's cool. And oh yes, here you go. So you can create a I'm gonna have to hold on a second. I have to think about this. Where did I create this? It's been so long since I've done this. Now I'm having a brain fart. Okay. No. Main. False. I am having a complete brain fart. I'll have to get back to you on that one, to be honest. You should be able to. Swear it was in this bloody thing here. Tasty. Sectors. No. Main. Pulse. I obviously created one because I put all these bloody ones in. You could probably take the main one, which is a default one, and then just add in XSP, SPY, SPX, QQQ, NDX, IWM. The only one we really care about is SPX anyway for this, or if you're starting small, XSP. Okay, so yeah, you can do it that way. Keep it simple. Now let me just make sure I'm not missing something obvious here. Watch list. Okay. Same shit. Create a new watch list. You do it here. So, okay. So, little 4 horizontal lines. Create a watch list. Call it whatever you want. And you can add a new list. And then you can add your symbols. SPX. Let me just create a list. Add a new list. Call it test. SPX. Add that to the list. Okay, I can QQQ, XSP, NDX, and so on. And you can import it via, CSV, but at the end of the day, it's just quick to type it. So with that being said, I can then switch across. There's my test list and yada, yada, yada. All right. So I'm not going to worry about that for right now. And test, I can delete all that if I wanted to, but I'll just keep it in there for now. All right, cool. Anyway, SPX, come over to the trade tab. This is going to give you what's called the options chain. Okay. Now, with the options chain, this is basically for if we were traders looking to profit from a directional move. In other words, we think the market's going to go up and we wanted to like trade it like stock, we would be on this side of the chart. See, there's 2 sides. So I'm going to break this down and explain what some of this stuff is. Okay, so this is what's called, I'm just checking my pen here. There we go. Okay, this is called the call side. Okay, so where you see this gray area, this is called in the money. In other words, right now, if I had bought, right now the price is here, 51.65, what have you. So that's where the orange line is, because it's above 51.65, below 51.70. And each one of these here is called a strike price. In other words, each one of these, you can buy an option or sell an option at these particular prices. So it's every $5, okay, in this case. So where it's gray, well, we know that the current price is above all of this. So if we had an option, its value is in the money. In other words, it's profitable. Over here, this is called out the money. In other words, it hasn't got here yet to any of these strikes, okay? On the flip side, so this is if we believe the value of the commodity is going to go up. Over here, this is called the put side. Now, if you want to think about it, for your Gen Xers who used to have phones with cables, if you imagine it, call up and put the phone down. Okay, if you just want a mnemonic for the direction. So on the left side is if it's going up, on the right side is if the market believes it's going to go down. Okay, this is important for what we do next. So over here, the darker area is, again, it's the opposite. It's out the money, and the darker, the lighter gray area is in the money. So here's the thing, and this is why this is important. Like I said, I'm going to go through this a couple of times. We are looking to sell to the other side. So to clarify this with today's trade, like I said, I have to, it's going to take me longer to explain it than it is for you to do it. Okay. So right now, we believe that the value of SPX is going to go down because that's what our pulse bar is reckoning right now. So if I was a traditional trader, I would go to the put side and create a trade in the belief that it's going down. Now, to do that, someone has to sell me that option. So I would be buying from them with the belief that the value of that option is going to go up because the market's going down. So this is why you can profit from if the market's going up, down, or sideways, doesn't matter. Because you can make money if the market's going down. So if I bought an option, and this is part that blows people's minds, and it takes them a little bit to get their head around it. If I bought a put option because I believe the value of this asset is going down, that contract, that option increases in value as the market goes down. So this is why we can make money when the markets go down as well as when the market's going up. Okay. Now, in our situation here, we want to be the seller of options. We want to collect the premium. So what we're going to do is, because we believe the market is going down, we're going to create a profit package at and around the price of the SPX right now. And I'm going to do it. Let me see here. And now that I've got a trade on, this might actually be a little trickier. But what I'll do is I'm going to do it with, I'm trying to think of the best way to do this. Because I've got a trade on right now, I'll use XSP as an example. There you go. This will be it. We'll do it this way. This way you can actually fine tune your risk factor here. So let's use XSP as an example, which is the small version of this. Just to put it into context, XSP, if you look at this right now, S&P 500 is 51.67. XSP is 516, so it's like 1/10. And it looks identical, the same. There's our pulse candle on this side as well. It's exactly the same data, just smaller. Now, let me pull up this. Okay, so what we're going to look for is the option which has a 0 day to expiration. In other words, this is today's option that expires at the end of the day. That's the first thing. Now, we believe that the SPX is going to go down. That's our pulse bar. I said that. So we're going to sell to the people who believe it's going to go up. Now, I lost my pin settings here. Hold on 1 second. For some reason that crashed. That's causing a little bit of... Okay. So, because we, again, believe it's going to go down, we're going to sell to the people who are on the call side. If we believed it was going to go up, we would be selling to the people on the put side. So it's a little bit backwards. Because we're sellers, everyone else is traditionally buyers. Okay? But we're going to be selling our profit package. So what we do is actually, it's the quickest thing in the planet once you start doing it. Okay? I'm taking more time to explain it than it does to do it. Literally, you can do it in seconds. So if I get a signal, let me just wipe this, and I believe the markets are going down, what I'm going to do, first of all, is on the bid side, I'm going to do 1 in the money, which means I'm going to go above the orange line on the bid, and I'm going to click it, and it turns red. That's 1 part of our profit package. And so I'm doing it at 516. The next one I'm going to click is the ask. So I'm selling an option, I'm buying an option, and the difference between these two is $1. Okay, so 51.16, 51.17. Now, if I look down here, I want to collect about 40 to 50 cents, because if I'm doing a $1 spread, I want to get about half that in premium. Okay, so right now it's telling me my maximum loss is $37. My max profit is $63. Now that's slightly imbalanced. So what I'm going to do, this is why, because it's hovering a little bit. So I'm going to move this package, because this is my profit package right now. I'm going to move it down. Okay. And that's a little more balanced. I might even go a little further. No, that's way imbalanced. And it's unlikely that this is going to get there. So, okay. All right, so I'm going to do it right about here, which is 517, 518. Now, the main thing is I want to get kind of a balance between these two. If I move it here, I'm only going to collect $20 and I'm risking $80. In fact, let me just move it back up, because see this, it's right hovering on this line. See, it's 516, 98, 99. So yeah, see that's moving just a little bit. So, but I'm risking 80 to make 20. That's a very big imbalance. So I'll move it up there. That's a little better. Now, I could modify this. Say, for example, this account is a smaller account. I only want to risk, say, $100. I can then increase the quantity, because I'm looking at my risk number here, because how much am I going to risk is the number I want. So what's closer, 58 or 116 to $100? Well, 116. Okay, that's fine. And if I'm right, I'll make $82. So, all right, that's as close as I can get to my number that I want to do. So if I say I've got a $5,000 account, I want to risk a percentage, so maybe 5%, then I could do this all the way up to, say, $250, which is closer to 32. Okay. So this is where you can determine how much profit you want based on your available capital. So if I said $5,000 account and I want to risk 5%, well, 10% is 500, 5% is 250, and I'll start with that. And then over time, as my capital increases, I can make that number bigger and bigger and scale up as I want. So do suggest keep it on the lower end, 2.5 to 5% of your overall capital, whatever you're putting in. But again, got to start somewhere. Okay. Now, a great question here from Paul is, why did you not want the imbalance in your favor for possible profit? $20 versus $80 risk. Yeah, I've got a higher probability of collecting that $20, but for $80 risk, I can do better. Now, for the level I'm at, yeah, I'm going to be on SPX anyway, but starting out, this is a good example. Goddamn mosquito in here that's dive bombing me. It's one thing about Thailand. The bloody the mosquitoes are like pterodactyls. They can be pretty big bastards. So anyway, we're just hovering around that right now, and yeah, we're good to go. Now, if I have net credit, all I'm going to do here is, and I'm just looking at this because the strikes, yeah, we got a little bit. This is going to be the closest because it's right hovering between these two strikes. All I would do is hit review and send, check again, net credit. In other words, I didn't do a debit spread by accident. Done that before. But I'm basically going to get paid by the market. I'm going to get paid in advance, the $160. And then at the end of the day, if I'm right, that's what I collect. That's it. So now if I go over to the web version, which I have here, I'll do now the web version's slightly different. So I'm going to do SPX. Okay. Where's my okay. Right there. Over to the trade tab. Okay, there we go. So I'm going to come to, and this is basically what I do. Oh, I've got a bullish signal. I come over here. I know I'm going to click bid. So get my red first, ask, get that. If I'm good, I'll check. What am I getting? $2.15 credit. You know what? That's actually not bad. Profit versus loss. I can adjust the strikes. Do I want to go in the money a little bit? It's hovering between the two, but that's too lower credit. Come down here. Yeah, that's a little too high. I think it's going to get there. So I'll just go one either side. Make sure I've got net credit, which I'm seeing here, which means I set it up right. Review and send. And I made a mistake. I forgot to change the volume until it's about 1,000. So I'd go up here. Okay, what's my max loss? That's the number I'm focused on. 885, which is only, it's $100. And that's $200. So I'll take 885, collect, maximum profit of 630, hit review and send. I'm good with that. Well, now that's not gonna, this account is a small account. It's only got $1,000 in here right now. So again, that's why I'm getting this. Hey, you don't have enough money. You can't send this order. But again, that's basically all I do. And again, looking at this candle actually went up. So what I'm going to do here is I'm going to mark the trade I have. Which is the fuck is the platform? Okay, there we go. So I've got a trade, like I said, on SPX at 51.70, 51.75. Okay. $51.70. Go back over to SPX. SPX CBOE, just for reference. 51.70. And all I'm going to do is just double click this. coordinates. 70. Okay. I'm just going to mark that and extend that to the end of the day. Then I'm going to duplicate that and move that down to 65. Okay. So now if this ends up below this line, I collect 100% profit. If it's where it is right now, which is above the line, then I lose 100%. Okay, right now I'm losing a little bit. All right, but I've still got plenty of time to be right by the end of the day, yada, yada, yada. Off we go. Now, let me just, that being said, I didn't plan on explaining it this way because it was just about setting things up. But let's just go through it step by step, what we're doing. So we start off with our pulse, okay? In the first 4 candles of the day, we want to see the pulse candle. We want to deploy a profit package of whatever we determine. Could be $50, $100, $1,000, whatever, okay? So we sell at 1 point above, and this will sell one option near the top of our pulse bar, wherever that close is, and we'll buy one at the bottom. So that's why when you said I was clicking the bid and the ask, one was red, one was green, okay? This creates our spread. So we buy one $5 away from that on SPX. So we're looking for approximately $2.50 profit from a $5 spread we create. So let's just kind of go through it. We look for $2.50 premium for our profit package. Remember, one stock, one option controls 100 stocks. So our basic package with one option is $250 on SPX. Okay. Now, this allows us to have approximately a 1-to-1 risk ratio. That's what we're looking for, as close as we can. So both the maximum loss, the maximum profit, we want that to be as equal as possible. We risk approximately 250 to make 250 per option. To get to our approximate, say, $1,000, we just buy more or sell more in this case. So we'll increase the quantity of both sides, and then we're ready to go. So, like I said, go through an example. That's just what we did here. I, in this case, bought, well, sold for, and I bought for, and I get paid a premium. And that's what we're looking for, okay? Now, right now, my position is down only $40, okay? Because we're still early in the day for this position and everything else. We'll see where we end up, okay, at the end of the day. So, actually, now we're breaking even, okay, just a little bit. And so all we do is, when we get our signal, and literally, it's one of those things that to explain the minutia is so much more complicated than the actual fucking doing of it, okay? Because it literally is, oh, I got a trade. Say, for example, it was a bullish signal. Well, I'm going to come over to the put side. I'm going to click here, here. What's my number? Okay, I want, well, I want it a little bit better than that. So I'm going to bring it down. So it's about which one of these strikes is going to give me about $2.50. Well enough right there. Okay. Yeah, it's hovering around a little bit. Cool. Let me now increase the quantity. So my max loss is about 1,000. Okay, that's the closest one to 1,000, and I'll get that. If that's the case, hit review and send, double check that says net credit, send order. I'm done. That's it. It's literally that quick. I don't need to know about the options. I don't need, by just teaching this shit, I need to go through it for those that want to know. But at the end of the day, it doesn't fucking matter. I just want my profit package. That's it. I click bid, I click ask, I balance out the numbers until I get the numbers I want, hit that, and then I'm done for the day. That's it. I really don't need to do much more than that. I just said, okay, right now, my percentage of my portfolio, what I'm risking, say 2.5%, equals about 1,000 for this particular account. All right, cool. I know what I want to do. And if I want to do it again, I just go, okay, well, you know what? Say for example, it was right here. And I go, okay, bid, ask, bam, bam, bam. What am I doing? Okay, that's way off. Okay, I can move it down. And now this is going to be all funky because I've actually got positions on here. But that's all I care about. So if it's a bearish signal, I'm coming on the left to do this. If it's a bullish signal, I'm going on the right. I click the bid, I click the ask, I adjust the profit until I'm getting about $2.50 in this case, and increase the quantity till I get to the number I want. And that's it, I'm done. Press review and send, make sure it's net credit, and walk away. So that's it. That's how we place a trade. And I do this, like I said, I at the beginning of this, when we got the signal, I did it on 2 different accounts very quickly. One on XSP, which again is smaller. One here, which is bigger. But it's a case of boom, 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 job's done. That's it. I get a pulse signal. I come over here, press like 5 buttons, double check myself. So I'm not doing what's called fat finger trading. And that's it. So in reality, it's so much easier, but I need to explain what's going on under the hood. But in reality, so what? Where's my profit? That's what we're focusing on. Now, okay, so Pamela, no. I did it because I have to demonstrate it, but I can't demonstrate it now because I've already got a trade. So we only do one. If we believe it's, and I'll repeat this again, if we believe the market's going down, we're going to do our spread, our profit package on the call side. If we get a signal, on it, say tomorrow, that we believe the market's going up, then we're going to do it on the put side. That's it. And we only have one going at any given time because at the end of the day, it's expired and we're done. Okay, and that's it. Why would you do it on 2 accounts if they're the same? Because one of them's my friend's account, one of them's mine, and I'm teaching them to trade, and I'm using them as a demo today so that I can show you it on XSP versus SPX. That's it. Okay, so it's as simple as that. Now, does the pulse candle need to be a minimum size? No, it just needs to be there. It needs to be a confirmed candle. That's it. Someone's asked, what is a pulse candle? Please refer to session 2. If you're at this stage and you haven't seen session 2 yet, then the pulse side of things won't make any sense to you. And this session assumes that you've watched that at the very least. Okay. So, right. Now, I'm not getting into the Q&A yet. Okay. Just saw a couple of quick questions there as I'm flying through this. So, just to recap, for a bullish trade, we're selling on the put side of the options chain. For a bearish trade or a bearish pulse, we are selling on the call side of the options chain. We quickly deploy this package with a $5 spread, hitting the bid first, the ask second. We can quickly adjust the strikes to maximize our profits. We can go out the money a little bit to sacrifice a wee bit of profit, but increase our chance of success. Ideally, we want to be either side of the current price. That gives us kind of the best balance between our risk and our reward. And adjust the quantity to get to your risk per trade number. In a nutshell, that's all we're doing, and it takes just a couple of seconds. Now, this will become muscle memory the more you do this. after you've done this a few times. So once we've set this up, there's four things that can happen. We collect 100% profit because this is where we believe we're selling to people who believe it's going to go down. Okay, so if it goes above that line, we collect 100% profit of whatever that profit package is. Okay, if it goes sideways and up a little bit, then we collect 100% profit. If we're wrong just a little bit, then yeah, we can still make money. We can be challenged, as it's called, but as long as it's above halfway between the spread, then we can still make money, and we have lots of ways to profit from this, basically. Now, if we're wrong and it goes below halfway between those two lines, and if it goes all the way below both lines, in this case on the bullish side, then yeah, we lose 100% and we come back tomorrow and do it again. Simple as that. So now on March 1st, yeah, this went above, we collected 100% profit and off we go. Okay, that's it. And it, like yesterday's trade, this was last night. Someone asked about last night's trade. Yeah, you can see here, again, did it on my phone while I was still doing the presentation, prepping the presentation, but grab the pen again. So I had one strike at 51.35, one at 51.40. I was getting $2.15 credit per SPX stock. So magnify that out. I bought 4 of those, which equaled credit of $860 at the end of the day. So that was my cost. That was my P&L for the end of the day. 100% profit. Done. And literally it was a case of, oh, I got a bullish signal. Boom, boom, boom. Come over the put side. Press bid, press ask, adjust that quantity until it was about 1,000. Boom, boom, boom. Press the button. Good. Now get back on with the presentation and get ready for the masterclass. Literally, it's that quick. So here's the thing. What I just showed you works on Interactive Brokers or any other place that gives you zero-day options. We use SPX because at the end of the day, it closes to cash regardless. Were you right, were you wrong? It ends up as cash in your account, and that's it. You don't get assigned stock or options or anything else. You don't get any of this other stuff. It's just straight cash, which is why I really like SPX and XSP, because they both clear to cash, no bullshit, no assignment. And it just makes it fucking simple. I mean, here's the thing. Although today, a lot of people are like, what the hell? Does Sean come with a translator? Because he just talked a whole lot of stuff I don't get. Look, at the end of the day, I have to tell you that part, but at the end of the day, I've just shown you how the engine works. I don't freaking need to, but I have to kind of like morally tell you exactly what's going on and how it's set up. But at the end of the day, you press bid, you press ask, you adjust it until you're getting a nice balance between your max loss and max profit. Increase the quantity or decrease the quantity until you get to the number you want that you want to risk. Press confirm and send, walk away. At the end of the day, it's really as simple as that. But we want you to be able to practice. Okay? We want you to be able to practice, but we're going to get to the paper trading in a moment. One thing that I wanted to talk about is how do we take profit maybe at the middle of the day? Okay, so I'm just getting this pen. All right, so what if we're making good profits around about midday? So this is where now, again, this is a little bit, we're not going to do closing orders today, but one thing you can do is you can create a closing order. So if it takes off like a rocket and it gets to a point where you've got almost like 99% of your profit or 95% of the profit, you can actually close it immediately and off you go. And you can create an automated closing order. I'm not going to cover that here because it's just going to add complexity where we don't need that right now. But it's a thing you can do. Next is if your profit package is almost worthless to the buyer, you collect most of your profit. And this means, we can do this automatically. That's what a closing order will do. The other thing you can do is around 12 to 1 p.m. is you can look at your P&L for the day. And if you're at like yesterday, we were doing this live and we were like 75%. And I said, yeah, legitimately, I could close this right now and take the money and run. That way I've got zero risk of it going against me through the rest of the day while I'm sleeping, okay? I could have done that. That is absolutely legitimate. So looking at like between 12, 1 o'clock in that little segment there, if you are like most of the way to profit, close order and done. So I could do that right now. I could come over here and I could just look at my positions, right? And I'm like, okay, fine. I could then close the position and right click, close the position and done. Or close it. This is another thing you can do. Close it 75% profit. Okay. So that automatically sets a closing order. Okay. That's one thing. Or I can just say, just close the whole damn thing right now. Okay. Done. So yeah, I can do that. I can close the position, and I can hit that and I'll be done. And that's it. I can also close a certain profit. So if it does that anytime during the day, I'm done. That's great. Now, there's a negative to this. This could trigger what's called the pattern day trader rule. Now, I say it's a risk. It's not really a risk. It's just don't do this all the time. The reason being is if you do 4 or more trades that close in the same day that you open them, and you do that 4 or more times in a 5 business day period, you would then be considered a pattern day trader. Okay. Now, the way around this is have at least 25K in your account. Okay. Then you're considered, okay, you're fine. You can go do whatever the hell you want. If you're under that, and a lot of people will be starting off small here, I appreciate that, then yeah, you don't want to do it too many times within 5-day period. And just keep a track of it. If you have to, if you want to, just keep it on a pen and pad. It's like, okay, I've already got 4 in the last 5 business days. I better be sabai, as we say here in Thailand. Relax, chill out. So again, that's one thing there. Okay. Now, Ian, the answer to that is yes, but in our favor. Time decay, if we're selling options, time decay works for us, not against us. It works against those who are buying what we're selling, which is why I love 0-day options. In fact, the closer to the end of the day, the more profit we're potentially going to make. That's it. The faster that profit goes, or the percentage of profit, if we're right, goes up. And yeah, our probability of winning is good. Okay. All right. Now, in choppy markets, though, what we're talking about here, it can increase our win rate. So let's remember this from earlier. We were talking about we had 3 losses and only 2 wins. Okay. And that looks like that's only a 40% win ratio. However, looking at if we know that we're in choppy markets, like right now, like I said, it's in choppy markets, there's a lot of weird stuff going on. Well, if I took profits at the top of the day, like between 1, 2 o'clock and what have you, or sorry, 12 and 1 o'clock, I could have taken out profit, and then there's 1, 2, 3 wins and only 2 losses. So even in choppy times like right now, that would have been a 60% win rate. So our 75 down came down to 60%. We're still making money. That's what's important at the end of the day. Okay. So with all that being said, and like I said, there's a lot covered there. I do expect you to need to review this and go back through it. Like I said, just keep it simple, stupid. And yesterday I did a snapshot video, a very brief video of here's what you need to do without all the extra stuff. I'm going to do that for this as well. So it's like a breakdown. It's like, okay, we got a signal. We know our number. Go do this, press, done. Simple. Okay, so it's okay to take your time to go through this as many times as you need. But from start to scale, we're really going to focus on 3 phases. Phase 1 is paper trade for 30 days. I'm going to go through this in a moment. And let me just see, how are we doing for bloody time? Oh, shit. This is going to be a longer session. All right. We'll deal with it. Right. So we're going to go for 30 days, paper trading. Phase 2 is when you go to live money, start small. Okay. You can use XSP, trade small for 30 days, $30 to $50 a trade. Okay. Then phase 3, whatever your actual main capital is when you build into it, or you start small and you just scale up, is now there's 2 ways to do this. You can do what's called a rolling compounding, or you can do a fixed compounding every 30 days. So me, I'm aggressive, but I've also got the time in place and the risk tolerance to be aggressive. Okay. I actually can recalculate every day based on how much I want to trade. But I would suggest, if you're brand new to this, is every 30 days, like every month, beginning of the month, reevaluate where your capital is and adjust accordingly. So if you're doing 2.5% of capital per trade, that's a good basis number. It means you can take a lot of hits and be wrong and still have capital to trade going forwards, like next week, next month, next year, and yada, 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 so on and so forth. But this allows you, with paper trading and starting small, it allows you to make mistakes earlier on without risking a lot of money. Okay, this approach allows you to build your confidence and create consistency. Like I said, that 45-day segment with a 74% win rate in choppy times is pretty damn good. But you want that consistency when you're paper trading. You want it when you're trading small. You want it when you're scaling as well. So this is a very rule-based approach that eliminates a lot of guesswork, but it also it eliminates a lot of the emotion as well. And when you do this, the more you do this, this will become muscle memory after you've done this a few times. So let's talk paper trading, okay? And by the way, yesterday's video where I did the summary video, it's in the members area. If you look on, it's in the Facebook group. If you look under media, you'll see session 2 quick hit video, or quick recap, or whatever the hell I called it, but yeah, you'll find it. All right, so paper trading. Let me come up with the Google Doc. This one, let me just put that here. Okay, it's actually in Sheets. Let me pull this up. All right, so here's what I'm going to do first of all. I'm going to also drop an additional video, which is a paper trading masterclass. I recorded this a few days ago, and I'm going to give you that video. It's an entire video about paper trading. So what I'm going to do here for brevity is the back of the envelope version. Keep it simple for right now. Okay. This other video goes through this tool I'm giving you here, plus a way to do this with Thinkorswim and Charles Schwab, which actually is the only platform that gives you the ability to try this live in the markets. So what this is a proxy. So start off, you can first of all file, make a copy, and copy this to your own Google account. Okay. Start off, create capital, whatever you want. You want to do 10,000? Start off with 10,000. If you want to do 100,000, you get 100,000. It's cool. Whatever you want to do. Then decide how much you want to risk per trade. 2.5%, and that's 2,500. Okay. Cool and groovy. So this allows you to say, okay, for this 30 days, I want to, each trade, I want to be about 12,000, 2,500. Okay. Now, here's the thing. A lot of this is going to tell you your trading performance over time. It's going to tell you current capital, what your total profit and loss is, and everything else, what your worst trade, your average profits, it's all built in here. And this graph will also show you your profile over time. You can use this not only as a paper trading, but also to track your live trades as well. Okay, so as you go live, this can be like your log. Now, you got two tabs, your portfolio summary, which is this, and your trade log. So let's say I was paper trading today's trade. So I come back over here. I can use Tasty Trade. You don't have to fund it, but you can create a account just to get the numbers. You can do that with Interactive Brokers. Just get the numbers. You don't have to fund it yet. But with this, I can then go, okay, well, open up, say, Tasty Trade, go to the trade. I know that my strike is 51.70 and 51.75. When I'm prepping this up, say, for example, I was doing it on the other side. I was, say, it's a bullish signal. So I would say, okay, well, I know that if I adjust this to where I want it to be, and I want to do, say, closest to $1,000. Okay, so if that was my numbers and I hit review and send, I got all the information here I need to paper trade. So I know my strikes, 51.70, 51.65. So I come back over to here. I know today's date, so I click that. I know it's SPX. It's a credit spread, pretty much in every instance here. 51.70, 51.65. My max profit was going to be, in this case, 820. That's the credit, see the CR. And my cost, if I go back to edit the order, or my max loss is 1,160. Okay, so, okay, come back over here. So let me just memorize that number. Okay, in that case, it just changed. 880. And then I think it was, I was trying to memorize it, but I'm doing too many things at once. So 800, 1200. Okay. It's adjusted just while we're talking. So 800, max loss 1200. So it's imbalanced a little bit, but then at the end of the day, here's the thing. This is the easy part. If I believe it's going to go up and it's, it's profitable, it's, in this case, say, for example, it's down. Okay. And it's below this line. Well, I know I've collected 100% profit. If it's above this line, I know I've lost 100%. If it's halfway, so in this case, 51.65, 50, have to do math, 57.50, is that right? 150. 167.50. Okay, I have to think about this. It's doing math. I'm doing too many bloody things at once. Okay, so if I move a 50% line, okay, and I change that just in this case to gray, I know that, and you're going to mark one eyeball this, and I'll use a yellow line. Okay, so in this case, right now, I'm not losing a lot of money because right now it's right at this 0 point line. If it's below this line, I'm making money, I'm profiting. If it's above this line, I'm starting to lose money. So if it's halfway between the 0 line and here, well, I know I've probably lost and guesstimated about 50%. If it's below this line, like it is right now, I'm making some money. Okay, so I know if it's halfway, well, I'm up plus 50%. So all I do is that, want to do that. Come over here and say, well, what did I actually win? So I could say 50%. Okay. And if I figure out, okay, what's 50% of max profit? $400. Okay. Well, my portfolio has done that. I can say closed. Reason for the trade, bullish pulse on a red flag news day. Okay. Or what have you. In this case, it was I'm just, yeah, this was a bullish setup I was pretending with. And then boom, that's it. Now over here, again on the portfolio summary, you can see current capital, total profit and loss, account growth 0.4%. It's plotted the first dot and haven't had any losses yet. And yeah, and it's starting to calculate up everything I'm doing. Done freaking deal. Actually, I just realized that needs a decimal place. There we go. But yeah, all done and dusted. And then you can just do this every day. Did I win? Did I lose? Would I have won? Would I have lost? Where am I at? Use the trading platform to figure out your strike prices and then record each day with this. So for this one, it was actually, obviously we haven't closed the end of the day yet. And I can delete this, and what have you. But yeah, I will record each day. I'm just deleting this because you don't need all this information right now. And that's paper trading. That paper trading comes from literally writing down on a pen and paper. I would have done this. It would have closed at that. This is the money I would have made. That's all we're doing here, just in a fancy way that I've done for. Okay. How do you determine the profit and loss lines on the chart? Again, we covered that earlier on. Like I said, you're going to need to review this a couple of times probably. This, I hate to say, is the most complicated part of all of this. But in reality, like I said, you do it a couple of times. You determine the strikes. That's what these white lines are. These are the strikes that I chose. And I just drew them on here so I could see them. And I can know right now whether I'm in money or profit or not. Right now, I'm just hovering around being slightly profitable. Okay, good. We'll see how it goes for the rest of the day. But right now, yeah, that's really it. I get a pulse bar, I go open a trade and press a few buttons, set my profit package, close it, and I'm done for the day. Here's the thing I really want to clarify though. While this seemed like a complicated session, okay, when you get down to the basic brass tacks of this, which is I've got a bullish signal, I'll go create a package on the put side, press bid, ask, adjust the numbers, press review and send, you're done. The fact is you need to have a little understanding of what's going on under the hood, but really not that much. Okay, it's a case of knowing your number, knowing your capital, and just practicing. And the more you do this, it is like walking. Soon you'll be doing it very, very well. Okay. Now, let me ask, because I'm very cognizant of the fact that I had to go a little in depth out of kind of like a moral obligation, if you will. But do you understand the concept, just in general, of a profit package we're selling to the market for people who believe differently from us? We believe it's going to go up. We're selling to people who believe it's going to go down. We pick up a profit at the end of the day. All we have to do is deploy that package, adjust it, and then confirm, that our numbers are good, and then hit review and send. Do you understand that principle in basic terms? If you do, great. That's all we need to do. Like I said, I'm going to record a micro video of this tomorrow, just without all this, without all the explanation. do suggest you go through this video once, twice, maybe even 3 freaking times, okay? And it will sink in as you do it. This is one of those things where you can get a book that tells you how to do it, but until you do it, it doesn't make any sense. So by doing this again and again, and even paper trading it, and just doing it, and then it's like, oh, this doesn't make any sense. Ask a question or figure it out. And then, oh yeah, go back, if you've got access to the extended recordings, you can go back, oh shit, okay, I get it. Okay, boom, 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 that's where I fucked up. Fine, go. Okay. But at the end of the day, again, this is as simple as it gets. It literally is, oh, I've got a pulse bar, which direction? Oh, it's a bullish, go on the put side, hit bid, ask, adjust until you got a balance between your max loss, max profit, and then adjust the price or the quantity until you get to how much you want to risk. Just confirm it says net credit, press the button, done. And that's it. Really, in a nutshell, that is it. Okay, now. Okay. Like I said, I did have an unannounced bonus, but I've already announced it. So we're going to do a quick recap. What is a profit package? How to deploy it? Taking profits at midday, which can increase your win rate. You sacrifice a little profit, max profit, for just the reassurance that if you are there at the end of the day or midday, you can take a profit, skim it. Hey, 50% profit is still bloody good. 60, 70, 80% profit is bloody awesome. And you don't have to wait for the rest of the day. It's like taking your chips off the table. And then we talked about paper trading as well. So time for the assignment. Okay. So this is the assignment I was talking about yesterday, but we're going to do it today. For the next week, okay, so beyond this masterclass into next week, find pulse candles, the first pulse candle within the first 4 candles of the trading day, okay? Then paper trade the buggers. Use the brokerage, whatever one you're using, to find the strikes, calculate the potential profits, yada, 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 and then log the trades and track the trade's success. Win, loss, estimated profit, etc. And then guess what? Keep doing it. Keep doing it. When you start doing this, then you're getting ready to actually switch to live trading, starting small and going onwards. Okay, that's it. Now, time for questions, and I'm sure there will be. So please, here's the thing. I'm going to do my best to answer as many base questions as I can, but I'm also conscious of the fact it is now coming up on 2 hours. Okay, so, and then I've got to do the red carpet VIP session in a few. So I'm going to try and answer as many questions as I can. I'm going to try and bundle questions together, and then we'll see from there. Do you open the paper trade in Tasty Trade? No, we do it literally. You simulate it without hitting review and send, so that you get all the information you need, and then you put it in the paper trade. You don't complete it in that. But there is a thing we're going to do in the paper trading masterclass that I'll drop in the morning, my morning, okay, your evening, because I'm not going to do it right now because I've got to go find the bugger. But I will drop that within the next 24 hours. And that shows you another way to do it as well, which again, is beyond what we're going to do here today. Okay, this is a great question from Alan. Alan B here. Okay, if I was doing, okay, let me delete this. If I'm on the put side, because we got a bullish signal, bid first, ask higher. Okay, if I'm on the other side of this, so let me just delete the leg. Bid first, ask lower. Okay. So keep that in mind. That's a good question. And I didn't really cover that. But yeah, bid first, ask after. Okay. And so closer to the orange line. Bid first, ask after. Okay. And then the reverse over here. So great question. No, there's another Alan B. Alan, I don't want to say his last name, but it's not you, Alan Brown. And that's cool. Okay. Someone's asking, Jim's asking, will there be a PDF? Yes, I'm going to give you a PDF of this entire slide, which included a breakdown of how to do this. So yeah, you're going to get that as well. John, you've continued to question, I can't find the first part. In the last chart you showed, but I don't see the first part of that with all the questions we have. So can you put, if you've got a full question, could you put the full question together, and that way I can help. Besides the transcript, can you please create a glossary of terms, principles, breaking it all down in Sean talk? That might be a little bit of a monster task. Try and do that with the, okay, in every transcript, there's also the takeaways, main points and things like that. So I do try to keep that in the balance, so to speak. And yeah, so there we go. I'll try, but the thing is, glossaries can be very expensive. And I just want to keep it down to bullet point processes where possible. Because honestly, a lot of glossaries, while I have to explain it certain ways, at the end of the day, focus on the actual process. And I will, I have a written version of this that I can do as a cheat sheet. I'll give you that as well. Okay, I'll give you that. Best I can. That's best I can do on that one. Okay. Where is my entry to rewatch these workshops? It's in the Facebook group, and the Google Doc gives you all the links to the individual posts. So for today's trade, you bought a, no, I didn't buy a call spread. I sold a call spread. This is from Richard G here. I sold a call spread. This is a profit package that we paid in advance for. So because it's a bearish sentiment, I believe that the market's going to go down, I'm selling to people who believe it's going to go up, and I collect a premium for that. That's the profit, and at the end of the day, that expires worthless for them, I hope, because that way I keep all the premium. Okay. What is the best link to sign up for the best brokerage? It's in the Google Doc. There's a section of there with resources with links, and you can see which one maybe is available in your country, whatever it is. Lots and lots of questions here. So I'm trying to summarize as many as I can. After this masterclass, if I need help on this, tomorrow we're going to talk about how to continue this journey. So for those that are like, yeah, I still need a helping hand. Look, this 3-day masterclass was really trying to give as much as I can in 3 days. But I also appreciate that we've started a journey here. You may need a little more hand-holding, a little more guidance, some ways to speed all this up and make this easier. We'll talk about that tomorrow, okay? So can you send the Google Doc again? Okay, Tam just did that. What if I open a trade in the middle of the day? How is the profit package then working? So Peter, we really want to do it in the first 2 hours of the day if it's there for this strategy. We've got other strategies. We'll talk about those tomorrow, but I don't want to complicate things right now. So we're looking to do it within the first 2 hours for this particular strategy in the morning. If you do it in the afternoon, you probably already lost all the potential profit, and your probability of success is much diminished, okay? But we do have other strategies in and around this where there's right off the bat 3 different ways we can profit in a day, okay? We'll talk about some of that tomorrow. Okay. Is it possible to get Sean's Pine script? We'll talk about that tomorrow. Okay. So getting ahead of myself, as I often freaking do. This indicator is something I built for you. Okay. Actually, I built it for myself. I improved it for you. We're going to talk about this as part of the continuation of the journey tomorrow to make things easier. And sneak peek, it actually has other strategies in here, built in. Some of the stuff we'll talk about tomorrow. Okay. Including ones we call the overnight bed and breakfast trade, and I just realized little change I have to make. Figure that out. And again, an afternoon scalper as well. So there's a couple of little things in this that I will. First of all, I just realized there's a small bug in this that I just visually saw because I'm using CBOE. I will adjust this, and we'll talk about this tomorrow because this does some very cool stuff. But like I said, don't want to get too far ahead of myself today. All right. Do you offer better rates for the program that we'll get into that tomorrow? Okay. Okay. Trying to catch you. No worries, Paul. I was going to actually answer your question here in a second. How long should we try to obtain the optimal $2.50 credit versus clicking, say, $2.10? Honestly, it could move away from you very quickly. It could be moving. I just look at right now, what's the best? That's the one I choose. Press the button. So if I'm not getting perfect pricing, or if it's way the hell off, like it's a very imbalanced session, I'm going to walk away from the trade. I'm not going to take a very shitty trade. But if it's just a few, like, plus and minus 30 cents in this case, I'm not going to worry about it. I'm just going to take it. All right. Can you provide more information about your other programs? I could, but that's going to detract from everything else we're doing here. So I'd say that's a conversation for the future. And we may do some other masterclasses on some of our other methodologies in the future. Okay, so that'll be that. What's the biggest difference between Tasty Trade and TradingView? Okay, this one's very easy. TradingView is literally a view of the markets. Okay, it is a way to analyze, to just visually see what's happening in the markets. Now, it does connect to brokers. Tasty Trade is a broker. This doesn't connect with it, unfortunately, unless things have changed. Let me just check. See all brokers. I don't think it connects with Tasty Trade. I'm just checking. It does actually, or it did at one stage, connect, but I don't think it does options. That's the thing. There's no options connection here. But I was just curious to see if they connected with Tasty Trade, if that's changed. It doesn't look like it. But okay, so for the most part, just consider this as a visual layer. Tasty Trade is the execution side. So you do your analysis here, then you go execute it on Tasty Trade or Interactive Brokers or whatever your broker is. So this is basically the visual part for analysis. Then you go execute elsewhere. What's the difference between Tasty Trade and Charles Schwab? Just different brokers. Charles Schwab bought TD Ameritrade, and TD Ameritrade had a platform called Thinkorswim. Thinkorswim was a very good platform, but now you have to have Charles Schwab account to use Tasty Trade, to use their platform Thinkorswim. We talk about this, funnily enough, in the paper trading workshop I'm going to give you. And that allows you to paper trade in their platform. But like, I think it's, if you have a Charles Schwab account, without it being funded, you don't need to put any money in there. You can practice that way. We talk about that extensively in this masterclass I'm going to be giving you as a little bonus. Yes, Tom did create Tom Shoshanov. I can't ever say his name, but yeah, he created Thinkorswim, then went off when TD Ameritrade bought him out, and he went and created Tasty Trade. So yeah, so you know it's built well, to be honest. Do we just need the cheapest trading view account? Yeah, you can go with the basic, or the basic, or at least you can get the free or a 30-day trial of the basic one, which is like $15. What about paper trading on TradingView? It won't work because you can't do options paper trading. So it's not. Okay, magic word. We'll get to the word in a moment for the possibly. Again, I want to get through all the questions first. Minimum suggested amount to start placing non-paper trading. Again, that's going to depend on your personal budget. Some people have small budgets, some people have larger budgets. However, what I do suggest is when you first start, one lot on XSP. Okay, it's the smallest trade you can do just to practice. And right now, I think that works out to be about $30. Let's just have a look real quick. So if I come over to XSP, and I'll do a Johnny one lot here. We just clear the order. I'll do a. Okay, so today was a bearish day. I just had to think about this for a second. So today, okay. So like $45. Okay, that's the smallest actual trade you can do. So if you had a $500 account, that's about 10% of your portfolio. So yeah, kind of $1,000, maybe a better bet. Okay. Now here's the thing: you can do this with stock, and instead of doing options, you can just go buy the actual stock itself and see. Okay, at the end of the day, did I make money? And start there. But I would suggest paper trading again for at least 30 days, and then figure out how to raise capital to actually trade live. Okay. Is there okay. Sean said he was going to share a paper trading class with us. He recorded. Yeah, okay. Sorry, I'm looking to see if that was a question or not, or if that was a statement. So, okay, that's fine. Okay. Is there a secret to moving 3,500 out of your Roth account? I am not a financial advisor. I'm not even going to touch that. Ain't my wheelhouse. Ain't what I'm going to cover. Speak to your CPA. Yada yada yada. You know the rest. Or you might actually be able to transfer your Roth or trade from your Roth IRA. Some Roths you can, you cannot, but you may be able to transfer it from one IRA to another and trade from that. Speak to your CPA. How would this same trade be done on Charles Schwab? It's the same thing with Thinkorswim. You go find the options chain. Do I have my Thinkorswim? Okay. Yeah. God, I get down these bloody rabbit holes. Hold on. Let me see if I still even have it installed here. Just to show on different platforms. Wait for this to load. Okay, it looks like I have it. Let me just see if it installs updates. If you can trade in an IRA, then it doesn't matter what it is. It just becomes an entity in this case, to answer your question there about IRAs. I cannot access the red carpet area from JVZoo. Here, I'm just going to give you this. All right, set that to your directly. Okay, Thinkorswim is still loading, so we'll see if it installs its updates. We can't do it. We can't do it. But do we need real-time data or delayed data with Tasty Trade? You get real-time. Okay, so with Tasty Trade, you're going to get real-time. With TradingView, you can buy and get real-time data, but for SPX, it's real-time anyway, and it's free. So yeah, not a problem. Now let me just see if this works. Okay, so okay, it sent me a security code. But when you log into Thinkorswim, you're going to choose, instead of live trading, go to paper money at the bottom. I'm just going to get a code off my phone. Just bear with me. See if it actually sent the bastard. Okay. So that's logging in. It'll take a moment. Let me see if I'll answer any other questions. Hold on. All right, so all you do is come over to trade, and I'm on SPX. I go find today's one with a 0. Look familiar? It's the same shit. And I would go, okay, so today is a bearish day, so I'd come over here, click on bid, click on as, or actually right click, and I'm going to sell a vertical. Click on 70, then reduce the amount. Selling, so only one lot, $2.40 credit, confirm and send. I can then see, oh, that's $240, max loss, max profit, actually a good balance. I just adjust the quantity. So in this case, for example, 4, confirm and send, close to $1,000, send, and I'm done. And then that creates, you've got a virtual $200,000 that you can trade with, and then off you go. Like I said, I cover this in more detail in the paper trading masterclass, but yeah, that's the 30-second version. Okay. Is XSP going to increase to $5,000 over time? I doubt it. It's always going to be 1/10 of the main market. That would require that the main stock market increases to 50,000. So you're not going to get priced out, and it's not going to go there anytime soon. Okay. It's gradual increase. And then what will happen is if XSP gets to a point where it's too expensive, another micro one will come in behind it. Where can we get the paper trading masterclass? I will drop it in the Facebook group. Okay. And it'll be up for a limited time. Okay. Remember, at the end of this masterclass, which will be, say, Sunday, maybe Monday, everything's shut down, everything's deleted, and that's it. We're all done. Okay. Let's keep that in mind. Red carpet says it's closed when I go through JVZoo. You're talking about the access to the upgrade, or are you talking about something else? Because yeah, we stopped selling it, but you can upgrade. There are links and everything else. Oh shit! The link I sent. Sorry guys, I'm typing fast because I'm doing funky shit here. Hold on. Yeah, there's a big, glaringly obvious typo. Okay, hold on, Graham. That's the correct link. Let me see who's the other dude I set that to. Oh, there you go. That's the correct link. Gemma. Yes. To answer that question. All right, cool. Selling a call for a bearish pulse and selling a put for a bullish pulse. Just to correct that there that you're asking there, Richard. All right. Wolf, I don't know what which link are you asking for, because we've got a lot of shit flying over. So if you've got a question, please be specific, because we have hundreds and hundreds and hundreds of questions and people and shit flying around. Okay. Will the Facebook group be running next week? No, as I said, come Sunday or Monday, everything shuts down. Okay, and we're done. That's it. Everything gets sheltered, shut down. Everyone gets kicked out of the group. All the posts vanish like they never existed. Okay. Monica, Keith, people are saying, can you put the link in this chat and everything else? Listen, I can't put red carpet links in here when everyone is here. It's not in the red carpet, because that basically gives everything else. So you need to be specific about what link you need, and then I can maybe help you. Okay, so if you could do so. Okay. Anil, you're asking why? Why what? Why are we shutting everything down? Because this is a limited time masterclass. Okay, and everything shuts down. That's it. The whole point here is that this is a live masterclass with live education. If you want extended access to the recordings and everything else, there was some optional extras where you can upgrade that. But if you want to continue this journey, again, we'll talk about that tomorrow. Okay, so yeah, we'll talk about how to continue this journey tomorrow. And yeah, so stay tuned. Wolf, did you share one a minute ago? I shared one privately with some people who needed a specific link to a specific thing. Okay. That may not apply to you. Okay, so just be clear. You know what? It's a timer on that page. Yes. Shoot. All right. Check your email or contact support@tradecanyon.com. I've just remembered there's something on that page that will expire that page because the actual launch is over. So yeah, there is something on that page that will expire it and it will disappear. So check your emails, because I did send out lots of emails. Check them for red carpet this and red carpet that, because I send it out from multiple emails and it has the same information in those emails. Hopefully you've got those. All right. Yes, I'm going to get to the code. I'm trying to answer everyone else's questions. Okay. Please be patient. Okay, I'm going to wrap it up, I think. Ed, I'm confused. How do you know that your strike point was 51.70? We review this again a couple of times if needed. The live, because we're live streaming in Facebook, you can go through that and fast forward, get to that point, and you can see and go through it several times. Okay. And then go try it on your own and just say, oh, okay, now I get it. But yeah, I'm not gonna, we're getting to the end here and it has been 2 hours. I want to be cognizant of everyone else's time. So re-review the replay and go from there. Okay. Right. Okay, here's what I'm going to do for a couple of people. So, Carl, I'm sending you a link. That's going to be where the session is after this, okay? If you're in the inner circle or red carpet, then while the main masterclass is, the main Facebook group is going to be deleted, you have access to the replays. That's part of the package you purchased. And for the Elite Inner Circle, we have a Facebook group that's dedicated. That one is not being deleted. Okay, so just keep that in mind. Okay. All right, I think I'm going to wrap it up right there, guys. Going to do the code, like I said, and then I'm going to go over to do another 30 minutes to an hour with the Inner Circle. So again, you need the code from each session. You better go, if you haven't seen session 1, you better go there because that's getting deleted tomorrow. But the third code today, although it says second because I forgot to change that, is package. Okay? Package. So write that down. Now, aha moments, because this is always something I like to do. And as you can, actually, I didn't really get any sleep last night, so I'm a little bit exhausted. So if you notice the energy levels coming down, it's because my brain's shutting down now. So, what Launch your big moment. So we'll just post that. And again, I'm going to put $100 up for the one that I like the most. So I'm just going to put this link in for everyone. All right. Boomski. So there you go. I love reading these. I do read each and every one of these. And throughout the day, even, as people are coming through the replay and that, I love reading them. So again, and I do go through each and every single one, even if there's several hundred. So I really want to make sure you're getting this. And like I said, there's a lot of stuff that we covered today. But at the end of the day, ladies and gents, let's keep it simple. Once you understand this process, and once you've done it a couple of times, figured it out, you're like, all right, cool. You don't need to understand all the options. You don't need to understand all the minutia. I need to go over at least the very basics so that, again, you understand why you're doing what you're doing a little bit. But at the end of the day, it's just a case of execution. Repetitive execution of the same process creates the profits. And at the end of the day, that's what it is. Okay, Barry. Okay, hold on. Yeah, let me just, okay, I just want to make sure you're in here, so. Okay, that's what you're going. All right. With that being said, I'm going to rock and roll out of here for the red carpet VIP. Same link as always. You'll be live with Sean in just a few moments. And from there, we'll rock and roll. All right. That being said, take care. And we'll see you for the most important session is how we continue this journey and go beyond. We'll do that tomorrow. Same bat time, same bat channel. In the meantime, take care.